Everybody, this is the accounting professor. I hope we're all doing well. In any event, let's go ahead and take a look at the question we have for today. I'm going to make two separate videos on this, but here we have Fitzgerald Pharmaceuticals Corporation, and we've got long-term debt, 8% convertible bonds payable, 10% bonds payable, total long-term debt, and then we have over here our shareholders' equity. Preferred stock, 6% cumulative, $50 par value, 100,000 shares authorized, 25,000 shares issued and outstanding. Now, note of this preferred stock, it's not convertible. So that's kind of something to kind of keep in mind. And then we've got common stock, additional paid-in capital, retained earnings. So before we get to the more complicated one, which is going to be diluted earnings per share, let's go through and do the basic earnings per share. So our basic earnings per share is going to be our net income minus our preferred dividends divided by the weighted average shares outstanding. So when we go through and look at this, our net income is given to us for this particular question at, okay, 1.5 million. Now, with regards to the preferred dividends, it does tell us that there are no preferred dividends in arrears. However, preferred dividends were not declared for the fiscal year 2025. However, since these are cumulative, and by the way, in real life, you're only going to see this stuff for privately held companies. You're not going to see it for publicly traded. So in terms of the preferred dividend, you're basically going to see over here. So you've got 25,000 shares outstanding. It basically has over here a 6%. So you got a $50 par value. So over here, you've got a total of 1.25 million, which is the total value of the preferred stock. If I multiply this by the 6%, I'm going to come up with 75,000. So in terms of our formula for basic earnings per share, this is going to be 1.5 million minus 75,000. And this is going to be divided by my weighted average shares outstanding, which it tells us over here we've got 1 million shares issued and outstanding for the full year. One kind of important thing to kind of note is that the options are not the same thing as shares. We need to go through and basically run some tests to basically try to go through and figure that part of it out. The bonds, convertible bonds, are not shares because they have yet to be converted. Preferred stock is non-convertible. And then over here, 1 million shares, net income. Okay. So for this first one over here, this is going to be 1.5 million minus 75,000 divided by 1 million shares. So for our basic earnings per share, is going to be 1.425 or 1.43. So this is going to be our basic EPS for this particular question. So what I'm going to go ahead and do is I'm going to go ahead and stop this video, and then we're going to continue on with the diluted computation. I look forward to seeing you on the next video. Have a great day.